everyone, you're watching Weekly Forex Outlook by LiteForex. Before we start, I'd like to announce another interesting contest. Do you want to make videos about Forex trading? You have a unique opportunity to become a video blogger. Take part in the new contest by LiteForex. The participation is really simple. First, register at LiteForex.com. Then make a video, a forecast, or a lesson using LiteForex website and publish this video on your YouTube channel. You will win $100 from LiteForex. The person who makes the best video will get a free year job contract with LiteForex, so don't miss your chance. And now let's get to our weekly Forex analysis. And we start by having a look at the chart of the US dollar index. American currency rose to the highest levels since the year of 2017, and demand for the USD is explained by the fact that traders are having negative risk appetite. They want a safe haven because there are concerns about global growth. There are concerns about trade wars between the United States and China. As a result, the USD looks like the most reliable currency to them, and this helps the USD to stay near the maximum levels. At the same time, there will be an important event this week in America. The Federal Reserve, the US Central Bank, will announce its interest rate on Wednesday. It will be the final meeting of the US regulator this year. And according to the forecasts, the Fed will raise its interest rate by 25 basis points. This rate hike is already priced in the value of the USD, so an actual rate hike may not move the US dollar much. At the same time, traders will pay great attention to the statement and the press conference of the Federal Reserve because at the last important meeting at September, the Fed forecasted 3 rate increases next year. Now the futures market is pricing in only 1 rate hike in 2019. As a result, it is important what are the new forecasts of the Federal Reserve. If they forecast 2 rate hikes or more, it will be positive for the USD. If they forecast only 1 rate hike and sound cautious, saying that everything will depend on the economic data, then the USD will correct down versus other major currencies. Let's check the economic calendar for other key events. We go to LiteForex.com and we see that on Monday the data agenda is rather light. What we'll focus on is US housing market data on Tuesday. Also on Tuesday, yes, this was Tuesday. On Wednesday, there will be British inflation figures. There will be Canadian inflation figures, core CPI here and CPI in the calendar. US existing home sales. Here we have some data releases from New Zealand GDP figures, key indicator of economic growth. So the currency pair New Zealand dollar versus the USD will be influenced by this release. Also, other important events this week include British retail sales figures on Thursday and the interest rate decision and the meeting of the Bank of England. And well, what else do we have here? On Friday, there will be British GDP figures and current account data, and US figures, core durable goods orders, and the final reading of the GDP for the third quarter as well. So final release will be Canadian retail sales data. So you can see that this week we will have this key data days: Wednesday, Thursday, and Friday. There will be some economic news for Britain. However, the main topic is now Brexit, and the latest developments there are that British Parliament did not vote on the Brexit bill. This was delayed, and Prime Minister Theresa May didn't get concessions from the European Union leaders for her Brexit plan to push it through Parliament. So talks will take place later, they will take time, and likely some key vote in the British Parliament will take place only after the new year. As a result, we'll get this uncertainty, continuous discussions about Brexit, which will have a mildly negative impact on the British pound, although the threat of collapse has now diminished. So the Bank of England on Thursday will likely underline the risks for the British pound, and well, positive things are not really likely here. Let's switch to the charts of the main currency pairs in MetaTrader. And if we look at the weekly chart of the US dollar, of the euro versus the US dollar, we'll see that for yet another week, the pair traded between 1.1450 on the upside, the 50% Fibonacci level, and the 200-week moving average, which is located around 1.1310. This line is acting as support. Last week we closed a bit below it. Now we are exactly at this line. And decline below 1.13 will open the way down to the next Fibonacci level at 1.12, while the recovery will be limited by resistance at 1.1450, 1.15. The Europe won't release any kind of really important economic data during the upcoming days, so the dynamics of euro-dollar will depend mostly on the news from America. Here we can see that on the daily chart there was an attempt to get lower, a close below the support line. So now it is a bit harder for euro-dollar to get higher. If the Federal Reserve disappoints, the pair will be able to get towards 1.15 mark, although it might be difficult for the euro to keep rising because of the weak fundamentals of the euro area. GBP USD pair made a negative development last week. We can see that it broke below the support line, and although it didn't close at the week's minimums, still it is under pressure and vulnerable for decline to 1.2415, where we find the next Fibonacci level. On the upside, there are a lot of resistance levels. Let's see on the daily chart. Resistance is at 1.2660, and the recovery above this level will make the pair form a temporary double bottom and lead it to recover to 1.2760, 1.2835, where the pair will have greater resistance. As for dollar yen, it keeps consolidating in a triangle. Last week there was another movement from the support line towards the resistance. And this week we expect the volatility to increase because there are a lot of important news for the US dollar. And by the way, there will be a meeting of the Bank of Japan as well on Thursday, although Japanese regulator is not expected to change its policy. So it comes down to the USD mostly. And if the Federal Reserve signals multiple rate hikes next year, then the currency pair will test resistance at 114 and aim for 115.50, 116. If the Federal Reserve disappoints, and as some analysts fear, if the Federal Reserve signals a pause in the rate hiking cycle, then decline below 113.10 will open the way down to support at 112.25, and the loss of this level will lead to a bigger correction of the market and open the way down to levels below 111. Risk-sensitive currencies are having troublesome time during the recent trading sessions. We can see that Australian dollar continued its decline. The downtrend continues. There was an attempt to recover during several days of last week, but it formed the continuation pattern to the downside. The pair closed below the 50-day average. So now it looks exactly likely we'll see the decline to 0.7090 level on the downside. For the New Zealand dollar, here the picture is also rather negative. Support is at 0.6760, below 0.67 is the next support level here. So gold corrected to the 200-week moving average at 1233, where at this level we expect gold to find some support, although on the upside the price is also limited by this declining moving average, and resistance is at October high at 1243.75. So gold needs to overcome this level to get a chance to get to the moving average at 1253 and 1262, the next Fibonacci level. US dollar Canadian dollar is trading in the upside channel. There will be a lot of data for Canadian dollar. Recently, Canadian economy has been weaker. This helped the US dollar recover and rise versus the Canadian currency. And the data from the US will impact the pair as well. So we kind of watch the resistance here of this channel and the support provided by the channel and the previous highs and lows of the price. So that will determine the price action here. This is all for today. Thank you for your attention. Visit LiteForex.com for new trade ideas and for the instruments to make money on Forex.